Hey guys, Mike here again. I just going to do a quick update on Flow Traders. They released their earnings this morning. It is the 21st of April, and I'll just go over some of the outcomes here. Really, there's not a huge amount to talk about. The results were similar to quarter four. The income was down 2%, profit was up 2%. That was based on lower taxes, so basically it was flat from quarter four. It's down. Income was down 25% from last year, and income and profit was down 39% from the first quarter last year, but that was due to the Ukraine war dislocation. So they had a good, I think it was the best quarter last year. It was quarter one. So it's maybe the market forgot about that. Maybe they're comparing the results to last year. I'm not sure, but the market definitely didn't like these earnings. I think we're down, 336 today. And I think maybe that has to do with coming in under expectations. The consensus earnings, I think, were 95 cents, and we got 79 cents. I personally was expecting higher earnings as well, just because of the big move in bonds this quarter. So I thought they were going to have more fixed income revenue here and less equity income, but actually it was the other way around. Equity income was better and bond income was mostly flat from last quarter. So again, this company is almost impossible to estimate earnings. And I think that the market just generally doesn't like that as well, because they want to be able to have a nice, clear, linear kind of behavior, and it's this company is just not like that. The things I do like, though, is, like I talked about in one of the other videos, these are lumpy earnings, and I think maybe I'll get the percentages wrong. Buffett says I'd rather have a lumpy 15% than a smooth 10% or something like that. Maybe the numbers are different, but right now what these guys are trading at is 14% earnings yield, so that's really good. That's after the drop. And yeah, so that's a PE of, like, what's that, 7.5 kind of thing, less than 7.5. If they continue with these sort of 80-cent quarters going forward for the year, that would translate into 320 in earnings, and 50% of that would go to a dividend. So that would be about a 7% dividend rate. Not bad at all. I think for me, that's a great business to own, something that just churns out a lot of cash and doesn't require hardly any capex, maintenance capex, or even growth capex. So all of that money can go towards, growth projects or returning capital to shareholders. The dividend, just as a note on dividends, there's another dividend next week for 80 cents. That'll put the last 12 months dividends at €1.50. And that is about a 6.6% trailing dividend rate. Now they talk about EBITDA in these reports a lot, but I think this is kind of a stupid metric for this company, because they remove the employee share incentive plan. So they take that out of the EBITDA number, but then they go into the market and repurchase those shares with their cash flow. So it's a bit of a trick. So I would not go by EBITDA here. I would use the earnings number, and that's what I'm interested in. What else do I want to talk about here? There was EU normal quarter for EU. They're still number one in ETP. They're growing their UK footprint, which is good. In America, they said that fixed income had a good quarter, that's what I expected, but overall it wasn't great. Now Asia is the more interesting place here. They have some growth positives here. They've started to use their infrastructure to enable fixed income trading, which is good. That's a new path to revenue or income, I guess I should say. And in China, they actually started trading this quarter, so that was one of the things I was kind of interested in. And I don't know if that's going to translate into a lot of income right away, but I think long-term that's a big growth driver. Buybacks, they spent $25 million in buybacks so far, but again, a chunk of that goes to employee share plans. So so I wouldn't take that as a full buyback. And also, if we look at the shares outstanding, the shares outstanding are actually up since Q4 and down slightly, maybe like 1% over year. So the buybacks aren't really doing a lot yet. I think they have to really increase that number to leverage the buyback plan. Outlook, basically, like, they didn't really say much. Employee count's going to stay about flat for the year, so that's good for the cost base, and they can use and they can expand at very high margins. If they get growth, they'll be at very high margins because they're not adding to their employee base, which is the majority of their costs. Fixed expenses 175 to 180 million, and the new CEO Mike, he seems to be interested in expenses. They didn't talk a lot about it before, but he did mention that they're interested in keeping those under control and that their expense base actually came down since Q4. So that's interesting. All in all, business as usual. The market didn't like this. I'm still happy with this company. I think they're a cash generating machine, good dividend. I'm holding, and if the price drops down into the 20 range, I'll probably add again. But let's wait to see how this plays out. Anyway, have a great day, guys. Speak to you later.